This video is about reversal patterns, and it's the latest in our series of tutorials on technical analysis. So we're going to be talking about 5 classic patterns that may signal that a trend is about to come to an end. We're going to run through what you should be looking out for in terms of these patterns and what signals confirm that the reversal pattern has completed. So do keep watching to the end of the video so that you get to hear about all of these different reversal patterns. Hello, I'm Peter Martin with Trading 212, and we add tutorials about trading the financial markets to YouTube on a regular basis. If you haven't already, make sure you subscribe to our YouTube channel by clicking on the red subscribe button, because that's the easiest way to learn when we've added a new video to YouTube. So where we're going to begin is just by revising some of the key building blocks we've been talking about in this video, namely support and resistance and trends, and then talking about what happens when a trend comes to an end and what we mean by a reversal pattern. Here we have a diagram that represents a sample of some key market behaviors that, as technical analysts, we need to be able to recognize. Now, if you've been following our Technical Analysis for Beginners series, then hopefully you'll know about these key elements that we've covered so far. If you haven't, I hope you'll check out those videos introducing concepts such as support and resistance and trends and trend lines and price channels. So here we can see that we have a line of support and a line of resistance, and that price here is ranging in a sideways channel between the resistance and the support lines until we get a price breakout here and the market moves into an uptrend. Now, what happens next? That's what this video is concerned with. Well, one thing that could happen is that the trend could just continue. In this case, with an uptrend, that means continuing higher, making higher peaks and higher troughs, which are those characteristic elements that define an uptrend. Of course, if we were looking at a downtrend, then continuing would mean continue going lower, establishing lower peaks and lower troughs. Now, another thing that might happen is that the buying power that's been sustaining the uptrend begins to wane and the market reaches a sort of equilibrium, entering a sideways channel. Maybe the trend resumes after that. Or maybe it breaks downward. If it does break downward, this is what we call a reversal. We formerly had an uptrend and now we get the reverse, a downtrend forming. Now you could get an immediate reversal. The downtrend comes to an end and immediately heads lower. That's not what we're going to focus on in this video. We're focusing on this type where you get the sideways channel and then the reversal. So how can we try and anticipate this? What signs can we look for? For this, we need to cast our mind back to where we started, to the most basic definition of what constitutes technical analysis. So let's quickly refresh our memory of that. And so the key idea of technical analysis, the core of technical analysis, is identifying market tendencies in past behavior and using that to inform our view of possible future behavior. So what are we talking about here? Well, I'm talking about recognizing price patterns. Price patterns can give insights into how trending conditions are changing. What we're looking for are certain classic price patterns that may herald the end of a trend or beginning of a reversal. And the first of these classic price patterns that we're going to look at is the double top. So here on the left we have our uptrend, and if we look at the peaks here and here and here, and at the troughs here and here and here, then we can see that the market has made successively higher highs and higher lows. The support and resistance levels that we're seeing there have been transitory. Market participants have been upping their appraisal of where they think it's a good place to buy and sell. They're prepared to buy at more and more expensive levels and are only willing to sell at better and better prices as the trend develops. But we see something a little different going on here. The market has failed to make a new high with this latest peak. Sellers resisted the latest push higher, and that resistance was at the same level as the previous peak. It's a sign that sentiment may not be as bullish as before. This is a double top. At this point, we need to continue to monitor the market because it's in a kind of holding pattern. The trend could actually resume, but if it breaks below this support level here, then we might expect that support becomes resistance, and it might be the start of a new downtrend, or in other words, a reversal, and a clear indication of the end of our uptrend. The second pattern we're going to look at is the triple top, and this is similar in some ways to the double top. So once again, we have the market here failing to establish new highs with its new peaks, instead meeting resistance at the same levels. This time we have 3 peaks, all with resistance at the same point. So this is our triple top. If you remember, one of our pieces of conventional wisdom was that the more times the market tests a level and it holds, then the stronger the support or resistance. So this is an indication of some strong resistance here because it's testing it a number of times and failing to get through. Now, if we see the market break below the support level here, then that is taken as a confirmation sign of the reversal. Third, we have a pattern called head and shoulders. Like the first two, this is a reversal pattern for an uptrend. Now, whereas with the double top, our first hold on a minute moment is when we noticed an equal high, a peak that only reached as far as the previous one. With this pattern, the first sign is here, where we get a lower peak. All the previous peaks have been successively higher, but this one is lower than the previous one. So with this pattern, the first peak on the left here is called the first shoulder, this peak is called the head, and this one here is called the second shoulder. And together, that is a head and shoulders pattern. Now this orange line is a straight line drawn through the recent troughs, and that is referred to as the neckline. And if we get a break below the neckline, then that is our confirmation signal that the pattern has completed. Fourth, we have the double bottom, and this is really just inverting what we talked about for the double top. So on the left, we can see that the market is in a downtrend and it's making those telltale successively lower troughs and lower peaks until here, where we see support forming at the same level as the previous trough. So this is our double bottom. And it's this resistance above that we're interested in. If we get a break above that resistance, then that is our confirmation signal that the pattern is completed, and we would be anticipating the possibility of a reversal. And fifth of the patterns we're looking at today, we have the triple bottom. Once again, this is really just inverting the concepts we looked at for the triple top. So it's a reversal pattern for a downtrend. Now, instead of 2 troughs finding support at the same level, it's 3 troughs. And this is our triple bottom. Once again, it's this resistance level up here that we're looking at. And if we get a break above that, then that is our confirmation signal that the reversal pattern is complete. Some final thoughts on these patterns. Bear in mind that trends can endure for long stretches of time. They can go on for months. Sometimes we've seen bullish stretches in stock markets going on for years. Now these patterns therefore can take a long time to develop. They're not short-term patterns. And as with really any technical analysis method, it's always worth trying to confirm what you're finding via some secondary method, maybe using a technical indicator. And we'll look at some technical indicators in future videos. I hope you enjoyed this video on classic reversal patterns. If you did, please take a moment just to hit the thumbs up button and give us a like. Or why not let us know what you think about these reversal patterns? Share your thoughts with us by sending us a message in the comments section. We do read each one. But that's all for now from me, Peter Martin, and Trading 212. Thank you for watching, and I'll see you next time. Goodbye.